CleanSpark just announced an increase in the company's credit facility with Coinbase Prime to $200 million. Now, this is all part of a broader capital management strategy that includes the launch of an institutional grade Bitcoin treasury desk. Can you take us through this expansion? What prompted this development to come about, and what's the goal?
So this has been something that's been long in the works for us. We have been approaching the market, I think, differently than most of our peers have. So, and this really started when we started discussing it at depth this past December when we raised $650 million on a convertible bond. But we were the only one that didn't take that and buy Bitcoin. Instead, we invested in our operations. And we did so because we believe it's better to invest in the infrastructure behind Bitcoin, which allows us as miners, of course, to get rewarded. And our cost is right around $34,000. So it puts us in a good position to acquire Bitcoin at a much lower cost. And that's really the direction we're going. But as part of that, we were holding all of that Bitcoin. Now, we had a goal in mind, and we wanted to get to about the levels we are now, which we have just over $1 billion in Bitcoin on the balance sheet. But in order to accumulate everything we mined, it means we had to use the capital from somewhere. So we're using that convertible debt and other facilities to add Bitcoin to our balance sheet. We're now going to use the Bitcoin on our balance sheet as kind of an additional step, and we are going to cover our operating costs. So that means we are going to be sellers of Bitcoin on a portion of our production. Our profit margins are really healthy, so we'll still keep adding to the balance sheet. But this Coinbase line of credit will also give us flexibility to support the growth in addition to supplementing it with our operating cash flows.
So expanding on all of that, why specifically now? You just said that CleanSparks Bitcoin holdings currently exceed 12,000, valued at about $1 billion. And so now's a good time to evolve from a nearly 100% hold strategy, you said, which was adopted 2 years ago, to using some of your monthly production to support operations. But how is this strategy different from those of your competitors exactly? You started to lay that all out, but what was the main goal in that regard?
So the main goal is, as an industry, we're maturing. And many of our peers are continuing to raise equity dollars in the open markets. We think that the markets are suppressed and generally undervaluing the entire industry. As a result, we have had no interest in, using the equity markets as a source of capital. We haven't used the equity markets since actually, almost 6 months ago, last November. That's very different. You've seen some of our peers put up, $1 billion or even $2 billion at the market transactions and continuing to use those dollars to add Bitcoin to the balance sheet. They're pursuing, the same strategy as strategy currently is, which is buying Bitcoin, adding it to the balance sheet for future growth. We believe in Bitcoin as a hardened asset, but we also believe we have a responsibility and a fiduciary duty to pursue the way that we think will generate the highest and best quality returns to our shareholders. And we believe that as we've approached this current size and scale that we're at, that continuing to add Bitcoin to our balance sheet by mining Bitcoin, but always selling the gap to cover operating costs. That means our shareholders don't have to be exposed to additional leverage. They don't have to be exposed to additional equity dilution. And that's the route that many of our peers are going for, but we still get to add Bitcoin to the balance sheet, although it may be a slightly slower pace. But it's, at our scale, we're still the second largest producer of Bitcoin on a monthly basis, and we're the largest producer of hash rate inside the United States on U.S. soil right now.
I want to shift to the changing landscape for Bitcoin amid a more crypto-friendly administration. Since January, when Trump took office, we have seen the establishment of the Strategic Bitcoin Reserve and digital asset stockpile. The president also appointed a White House AI and crypto czar, just to name a few crypto-related developments. What do you think has changed since Trump took office from a crypto perspective, especially as it relates to the Bitcoin narrative? And is the change in tone impacting your business at all? If so, how?
Yeah, since the administration took office, it's been a net positive for our industry. And a lot of this comes from the regulatory landscape. In the prior years, the Bitcoin industry and the crypto industry as a whole, we had a lot of headwinds that we were facing. We find ourselves with, some tailwinds at this point. In particular, the one that I would like to point to that I think's had the highest impact for the industry as a whole is SAB 121. What that is it is the repeal of something that essentially discouraged traditional banks from having exposure to Bitcoin or other forms of cryptocurrency. Um, as a result, there's now more traditional institutions becoming interested in holding Bitcoin and interacting with it. That's part of the reason is we've launched our broader digital asset management group internally, which means we'll be involved in, trading derivatives. It means we will be involved in trying to generate or in pursuing other forms of revenue, such as, lending Bitcoin on a short-term basis or other avenues that were to a certain degree inaccessible before because it was very difficult for traditional banks or financial institutions to interact. And for us, that made it so that the risk profile of the counterparties didn't meet our standards. But now we can have much higher quality financial institutions interact with us in these transactions.
Now, we have also seen the Trump family move into crypto. In fact, 2 weeks ago, we learned that the president's sons, Eric and Don Jr., got into the Bitcoin mining space, investing in a new company called American Bitcoin, which is controlled by crypto infrastructure firm Hut 8. In a news release, Hut 8 said American Bitcoin aims to become the world's largest miner while building a strategic Bitcoin reserve. What was your reaction to this development, especially with American Bitcoin's US centric focus? CleanSpark is also based in the US and operates data centers across the country. So, do you view this launch as new competition? Are you phased at all?
We're not just like we're not phased by, any of our other competitors. So CleanSpark, we are America's Bitcoin miner. And, as part of how we pursued that is our development on US soil. And the scale we're operating at will take a long time for anybody to catch up on. We are well on our way to 50 exahash. That's our current mid-year target. That would make us, by and large, in a very large gap for the amount of hash rate or processing power that is, managed by a public company on US soil. So we feel very comfortable in our position. We're also not here to keep up with anybody else. We've always, walked to the beat of our own drum. And we built the company differently in a way that we think was extremely cost advantageous, good use of capital. And we're just going to continue doing what we do best. And that's being one of the most efficient and the miner with the highest operational excellence in the industry.
So, you actually met with President Trump in private roundtables to discuss Bitcoin mining. We also discussed how Bitcoin mining can be a significant economic driver with Secretary of Commerce Howard Lutnick. Can you take us through those conversations and what was your goal when speaking with them? What was the main point you were trying to get across? And did you find those conversations to be productive?
Yeah, there's been several meetings, and all those meetings, they have been incredibly productive. In the very earliest days when we met with, at the time was going to be the future president and now our current president in Mar-a-Lago, the goal was to help bring an understanding of the industry. And he did have an understanding of the industry, but we wanted to further the regulatory discussion. And our goal wasn't to be treated special in any way. It was to be treated fairly. We were facing headwinds. We just needed the headwinds to go away to create an opportunity for the industry to thrive and flourish in the United States. And I think that that's happened, with very quick moves in the very early days of the administration. The headwinds we were facing from groups such as the SEC and other regulatory bodies, they've really calmed. And I think also now, if you look at Congress, both sides of the aisle are interested and engaged in finding the right type of regulation to create opportunities for the country to grow and flourish. They're also engaged in the energy discussions about how do we have energy abundance in this country rather than, all the conversations were vilifying the industry in a way that I don't think was fair. And I think we're now having much better conversations all the way across all parties in DC.
What else can people expect from CleanSpark in the near future? We've seen a lot of Bitcoin miners turn to AI for an added revenue stream following last year's halving event. And yet it seems like this was not a strategy of yours, as CleanSpark has kept the focus on Bitcoin.
We are the last one standing. We are a pure play Bitcoin miner. And, I think it's important to understand, my background and the company's background, and that is we were in the energy business. So we knew energy and then we learned Bitcoin rather than the other way around. And I really believe that having a data center that utilizes power to produce Bitcoin is still the highest and best use of that. Now, there may come a time where the larger data center play or HPC or AI as the buzzwords that are flying around all the time, there may be something that we would consider because we have a portfolio of energy assets that's approaching 1 gigawatt. And we have the opportunity every time we build a new site, and right now we have 32, that we could, decide to build the next site into something different. Right now, the reason we're staying laser focused is because the economic opportunity with Bitcoin mining far exceeds the opportunities that we're seeing exist in the space. We're seeing a lot of headlines, we're seeing a lot of buzz, but there's not a lot of that turning into actual revenue for our peers. And, we also did run a data center. In our very first acquisition, as we entered the space, we acquired a data center and we converted it to a Bitcoin mine instead of a traditional data center. So we've seen both sides of it, and we think that we are absolutely on the right path and that we are absolutely pursuing the best and highest use of our assets for our shareholders right now. But we're also very open-minded. Something I say often is we will always choose strategy over an ideology. And that means we are not going to be stuck in just this if there is a better opportunity. But that opportunity hasn't come yet.